FinTech products. This program is recorded and will be available later if you'd like to share it with friends and family. I've taken this program before. I can tell you it's got a lot of great information, which is why I asked Whitney Whisker of Cash Campaign of Maryland to come on and provide us this program as well. Next slide. Before starting, I always like to talk about what the Office of Consumer Protection does here in Howard County. We are part of the Department of Community Resources and Services, and our main mission is to provide mediation services to consumers and tenants who are having disputes with merchants and landlords. And the merchants can be Howard County businesses, they can be state businesses, US businesses, and we also deal with international online businesses as well. If the law is broken, we do also have the ability to take enforcement action. And we also obviously do a lot of outreach and programming, and we do license trespass tow companies as well as peddlers and solicitors, folks who come door to door, those who have maybe fruit stands, things of that nature, food trucks, etc. And without further ado, I'd like to turn this over, next slide, to Cash Campaign. And if you have questions, please put them in the chat box and we will answer them at the end.
Thank you, Tracy. Thank you. Hi, everyone. My name is Whitney Whisker. I'm a program associate for Cash Campaign of Maryland. And to give you a little background about what we do, CASH actually stands for Creating Assets, Savings, and Hope. And we are a nonprofit organization based in Baltimore City that promotes economic advancement for low to moderate income individuals and families in Baltimore, but we also work across the state of Maryland through partnerships, coalitions, and including our tax preparation partners. And to let you in on what we do, what services we offer. Our main bread and butter around tax season is our free tax preparation. And to get this information, you can visit our cashmd.org. But for free tax preparation around tax season, so starting around February through the end of tax season, which this year is April 18th, we offer free tax preparation for individuals and families who earned less than $60,000 a year, although this number does increase a little bit every year. For this season, we are completely booked, but you can also expect to see our back taxes come up around mid-May. So you can check our website to fill out an intake form if that's something you're interested in. We usually go back 4 years. And then again, have a reminder set for next year, early, our appointments do book up really early. So around end of January or February, you can look at our website to see our appointments again up for tax year of 2024. And then we also offer free education workshops and conferences throughout the year. So we just had our financial education summit last week or 2 weeks ago. We're going to have a common sense conference coming up in September, where we talk about different changes in the field of personal finance. Sometimes there's changes to medical debt and how taxes are done. So we educate our practitioners in the field on these new changes. And then for financial education workshops, those are more for clients who are interested in learning about budgeting, building their credit, paying down debt, some core personal finance topics. We also offer benefit screenings through our main website, where you can fill out an intake form that takes around 10 minutes to fill out, and we screen you for up to 22 different public benefits. And we also help you with the applications for anything you're eligible for. We offer financial coaching and financial planning, and these are individual one-on-one sessions with either a coach or a planner to discuss any personal finance goals, whether they're short-term or long-term. For financial coaching, that is ongoing, so we don't cap the amount of sessions you can take with a financial coach, and you can access that through our mdcashacademy.org website. We also offer financial fitness fairs. Our biggest one, Money Power Day, just passed. It was last month, but you can expect it again next year. We usually are at the Poly Western School offering various services. We have a credit cafe. We have our planners there as well. And then we run the Maryland Cash Academy website, where we have different classes going on throughout different places, including Howard County, other partners around the state of Maryland. And we also do advocacy and policy work. And then lastly, we have our Bank on Maryland initiative. So with our Bank on Maryland program, we work with financial institutions to advocate for a set of standards, like the golden standard on checking accounts for consumers. So these are accounts that are going to be safe, affordable, and convenient for consumers. But today we're going to be talking and diving into financial FinTech or financial technology apps, and specifically looking at different products and how they work, things to be cautious about. But I just want to get us started in this conversation. So what are some reasons, or what were some reasons you downloaded your favorite financial app? So this is anything, any app that has to do with money that can fall under this umbrella. And I can get us started with mine. One of my favorites is my online banking app. I have Bank of America, so it's just easy to go on there, look at my balance, versus when I first opened my bank account, I had to go to a teller or the ATM and they tell you your balance and the receipt. Now it's like at the tip of my fingers, all the information that I need. Anyone else?
I like my Venmo app.
Okay. And what were some reasons you downloaded, if you comfortable sharing?
Mainly because there's a lot of, I'm a swim team mom. So a lot of the concession stands that we go to on the swim circuit, they take Venmo for the food you want to buy. So that was one of the main reasons I downloaded Venmo.
Thank you. Thank you for sharing the convenience. Anyone else want to share or pop their answer in the chat? And Tracy, you can let me know. I can't read the chat. Oh, I think you're on mute.
Yes, someone has mentioned that they use CashApp.
CashApp. Do you want to explain why you use CashApp, or what was the reason you downloaded it?
She says it was ease with transferring money.
Okay.
And another person says, I also use CashApp because of how safe it is.
Okay, awesome. Thank you so much for sharing. And we'll be talking about both CashApp and Venmo shortly. So our objectives for today is to really understand the definition of FinTech as like the umbrella term, but also dive into identifying various types of FinTech products that are available today for us as consumers, and really categorizing them like in different pockets, because even though it's a very broad term, it can become very niche on like what services each company offers. And then our last objective is to learn strategies to choose the right FinTech products for us, and how to report issues when or if they come up. So we're going to get started first with our first objective by watching a video. What is FinTech?
If you've ever paid for something with your phone, transferred money using an app, or checked your bank statement online, then you're already part of a multi-billion-dollar industry. It's called FinTech, and it's changing economies around the world. FinTech is short for financial technology. Seems simple, right? Well, the term FinTech includes a huge range of products, technologies, and business models that are changing the financial services industry. It refers to everything from cashless payments to crowdfunding platforms to robo-advisors to virtual currencies. So every time you donate to someone's Kickstarter campaign, that's FinTech. Or if you transfer money to someone using Venmo, that's also FinTech. And that's just the beginning. Here at a major FinTech conference in Amsterdam, hundreds of companies are trying to disrupt the banking and finance industries by changing the way we pay and borrow money. And investors are buying it. Global investment in the FinTech sector has added up to nearly $100 billion since 2010. In 2017 alone, FinTech investment surged 18%. Startups focusing on payment and lending technologies received the majority of those funds. It's not just startups that are getting into FinTech. Some of the world's biggest companies, from Apple to Alibaba, are going big on it too. Just think of Apple Pay or Alipay. One reason for all of this investment, consumers are adopting FinTech fast. 1 out of every 3 people across 20 major economies report using at least 2 FinTech services in the last 6 months. China and India are leading the way, with more than half of consumers using services like money transfers, financial planning, borrowing, and insurance. Financial technology has filled a void for people around the world who don't have access to traditional banking services. In fact, it's estimated nearly 2 billion people worldwide are without bank accounts. Now, thanks to FinTech, all you need is your phone to take out a loan or insurance. Take Kenya, which pioneered a mobile banking system called M-Pesa. Kenyans access their M-Pesa accounts directly on their mobile phones to transfer money, pay bills, or take out loans. Today, an estimated 96% of households in Kenya use M-Pesa, and one study found it has helped lift roughly 2% of Kenyan households out of extreme poverty. The rise of fintech has forced traditional lenders, insurers, and asset managers to embrace new digital technologies. For example, wealth managers now have to compete with robo-advisors, which are automated financial planning services. I mean, talk about rise of the robots, right? Thanks to high-tech algorithms, these services are available 24/7 and can be more affordable than traditional asset managers. That helps explain why some robo-advisors already have billions of dollars under management. Like any growing industry, fintech isn't without risks, and some regulators have struggled to keep up with the fast pace of innovation. Think of peer-to-peer lending platforms, where individuals borrow and lend without going through a bank. Compared to traditional banks, these services might not be required to set aside as much money in case customers default on their loans. This can be risky for companies and consumers. Data privacy is another major concern. As more financial services go digital, cyber attacks become a bigger risk. The challenges facing financial technology are likely to grow as more businesses go digital. But for many of the companies and consumers here, fintech is more than a buzzword. It's a big business opportunity.
Okay, so that was our video on fintech, defining that it's essentially combining the word financial technology apps. And to give it some background, fintech is not a bank. So that's something important to keep in mind when we're going through these products, and a lot of them that offer financial services. So we'll talk a little bit about when they are chartered banks and when they're not. And so this is important to recognize because often these financial technologies will be regulated by the product they're providing. So we'll talk further on these different services. So for example, Robinhood, which is a very popular investment app, is going to be regulated differently to Chime, which is a fintech company that offers banking services, but it's not a bank. So depending on the product that they're delivering, they will be regulated differently. And then for fintech companies that are offering banking services, like having checking accounts similar to Chime, they're often partnering with a bank chartered and federally insured financial institution. So whether this is a bank or a credit union. And to give you an example of what that kind of looks like, we have here an example from Dave, which is an app we'll talk about later on in the PowerPoint. But Dave is a fintech company that offers financial services. So you can get a debit card, you can have your accounts, checking, savings accounts. But here in their disclosure, which I found on their website, and it was in very light gray, I had to darken it a little bit for this presentation. But they have here that says, designed by Dave, not a bank. And then they have that they are partnering with Evolve Bank and Trust, which is a member FDIC. So FDIC, again, is the what insures the bank federally. If it's a credit union, you'll see NCUA, but here they have FDIC, and this is the bank that holds the deposits and issues their debit card. So just something to keep in mind. These disclaimers are often in the fine print, and something we should be looking out for when we're downloading these apps. And then a quick disclaimer before we get into looking at different products. I just want to let you guys know that Cash Campaign is not affiliated with any of these financial technology products, and we are also not endorsing the products that are mentioned. The information that we're providing is simply for informational purposes, so it shouldn't be considered legal, investment, and financial advice. We can't guarantee or promise any results obtained from using this content. Essentially, we think that when consumers have all the information and are aware of what regulations are or what agencies are regulating the products that they're using, that we make better decisions and we can make more informed decisions. So that's why we want to share this information, let you know about these products that are out and available for the public. So if you have any questions, again, we can talk about them at the end.
And those disclaimers apply for Howard County as well.
Yeah. Okay, so let's start with our first category, which is our peer-to-peer payment tools. And many of you mentioned some of these already, and we may be you may be experts in a lot of these as well. But we want to talk about how they, even though they're all under this category, how they all function a little bit differently and why it's important to us when we're using these applications and what to keep an eye out for. So like it was mentioned in the video, a lot of people have turned to peer-to-peer payment apps for the convenience and the speed of it. So like Tracy mentioned, there are some businesses or some places where they don't really accept cash, they're cashless. So having these apps are easier to make those transactions, or like someone in the comments mentioned, receiving or sending money is just easier. Even long distance, if you're, have a relative somewhere else across the state, you can just send money easily. And then it goes into a little bit of access to banking, like it was mentioned in the video. Lack of access to affordable, safe banking has caused people to shift towards a lot of these fintech products. So let's talk about Venmo first, because something unique about Venmo, and it's the same with Cash App, is that where are the funds being held? So if you use Venmo, you'll see that you have a balance. And so if you have that balance in the account, it's essentially your Venmo balance or the Venmo account, it's held within the app. Versus a traditional checking account, we have it held in that bank, and that bank is FDIC insured, and it's within the institution. This is in the application. And although it's free to use Venmo or apps like Cash App or Zelle, like we'll talk about shortly, there are fees. So for Venmo, if you're looking at it, if you've used it, you'll notice that there's two options. You can either send the money instantly, and they have a percentage that they'll charge you, or a fee they'll charge you for sending that money instantly, or you can wait 2 to 3 days and you can still send the money, but there are no fees attached. And then we have Zelle, which functions a little differently because the funds in Zelle are held and sent through participating bank accounts. So they work more as a third party or like a middleman between different financial institutions. You can check on their website to see if your bank or credit union is listed as a participating financial institutions, but the accounts are held within any accounts paired with Zelle. So you can connect your checking account or savings account, but the money is in the bank connected. So here, that's different than having it held in a application. And also it's free to use if it's a participating bank account or bank or credit union. And then we shift gears a little bit with Apple Pay and Google Pay. They function differently in the sense that they allow consumers to link a debit or credit card or even gift card to the Apple Pay wallet or Google Pay wallet. And you're able to essentially use it as a credit card instead of using your physical card or cash at participating retailers. So this actually happened to me recently where I only had my driver's license, and I needed to buy something. I didn't have my cards, and I didn't have to go back home. I could just use my Google Pay at the store, and it was convenient and easy time saving. The only considerations about this is understanding that there could be fees, especially if you're using a credit card that is linked. There could be credit card transaction fees. And just in general, when we're looking at, and we'll be talking about different products, but some questions to keep in mind are, where are the funds being held? So understanding the difference between Venmo and Zelle, and where they are held will determine the protection level of that money. So is the money insured by an FDIC bank charter like it is with Zelle, or is it partnering with a member of the FDIC, or are there no protections? For example, Cash App, although they have a system of, if there's fraud, if they have a system of like you can contact them, they may mediate that case of fraud or scam that happened, but there is no guarantee that they'll return any funds. Versus if you experience fraud with a credit card at a bank, and there are certain regulated steps in place to make sure that you're not liable for a certain amount of time, depending on how much how quickly you report that fraud. So just understanding the coverage of your money. And then also, what are the costs associated with using the app? We want to make sure that when we're using our money, we want to get the best out of it, right? We want to make sure it's safe, affordable, and convenient, but that affordable part is important too, because it's not always clearly stated what the fees are. And it could be the same with financial institutions. A lot of people have moved away from them because of non-sufficient fund fees, overdraft fees, but that doesn't mean that these peer-to-peer payments are completely free either. So just understanding those fees, if you do have to send money to someone, can you wait the 2 to 3 days, timing it out, or ensuring that if you have if you're using Zelle, that you do have the funds backed up in your checking account, because sometimes if it's not, they'll still withdraw the money and you'll be left with an overdraft fee from your financial institution. So just understanding these different parts of the apps you're using. And then we move on to the daily money management apps. So I mentioned in the question that I use a lot my banking app. So this will be included in the FinTech umbrella as online banking applications. So we have all the banking features on our phones, so we can monitor our accounts, our balances, credit card balances. They even now have the ability to show our credit scores. I was seeing that Capital One has a program called CreditWise, where you can even get your credit report. A lot of them have cool features where you can set goals, you can divide your accounts. There's so many new features now available to just manage your money. And so that's the traditional route, right? But now we are seeing different types of banks. So now we have the online bank, which is, an example is Ali Bank. And what an online bank is, it generally is a bank charter. So they will be FDIC insured, up to the $250,000 per bank per account. And they do offer similar banking features. What makes Ali Bank different is that there is no brick and mortar. So often what you'll see in commercials or on their website is that they'll say that they can offer competitive annual percentages or like interests than the national averages, because they don't have those expenses that come with having brick and mortars. And so often they have no minimum fees for opening or depositing versus other banks that may have like $5 fee or a lot higher fees. And then with Ali Bank, the good part of knowing that they're bank chartered or FDIC insured is that that they are set their certain expectations with that membership, that they have to follow a set of standards federally and by states. So they are being regulated by the government. But then we see now the emergence of neobanks, which Chime and Albert are two examples of them that are very popular right now. So starting with Chime, we see that they have a lot of banking features. You can get a debit card, credit card, and then they have the overdraft fee, free up to $200. They have no monthly fees. And something important to know about neobank is that while it does still offer banking features, they are not bank charters. So for example, Chime, they partner with Bancorp Bank, who is an FDIC member. And they are considered a neobank along with Albert. And many people have switched to these, again, due to lack of trust of financial institutions. Many people have a hard time opening bank accounts with financial institutions, so this makes it easier for them. But again, some considerations is when we're thinking about the apps we use. I'm going to keep repeating this over and over, but are they safe, convenient, and low cost? And with the safe, we want to know where are the funds protected? How much are the funds protected? If it's FDIC or NCUA insured, it will be up to $250,000. Is it convenient? So while it may be digitally convenient, how is the customer service if a problem arises? So if I call Albert, will I be met with a computer, or is there going to be an actual representative at the end? Versus, if I go to my bank, I can go to a place and meet a human and have hopefully my issue addressed. And are they offering the services that will meet my banking needs? Because even if it's a FinTech product, maybe they don't have the product that is good for me. And then we see a lot of FinTech products are now offering lending products and tools. So we have here Earnin, who offers up to $500 check pay advance. And we have Empower, who offers up to $1,000 line of credit. And they'll say they have no interest on these line of credits, But again, looking at the little fine print, I went to Empower's website, and after looking at the fine print of one of their products, they did say that 35.99% APR is applied for late payments. So just doing a little bit of research, digging on their website, or even in the applications where you're going to download the app, you can try to find what are these, what is the reality, what are the terms. And then we see Klarna, who is now doing something that's very popular among fintech products, which is buy now, pay later, which offers people the ability to get an object today. So similar to like a rent-a-center where you can, let's just say you want to buy a pair of sneakers, but you don't have the entire funds. You can split up that final pay into installments and, you know, pay over time, but get the product today. So Apple Pay is actually just launched this month their buy now, pay later option as well. And here, again, something to keep in mind on is that, you know, you're getting this product today, but what happens if you miss a payment? You miss your third payment and fourth payment. Are there any interests on that? And because they are lending tools, are these companies reporting to any credit agencies and credit bureaus and understanding if you do miss a payment, how that will affect your credit score? And like we mentioned earlier, Dave offers different banking services, including cash advance up to $500. They don't do credit checks, which is, again, a lot of the access. They want to get people in, and people with lower credit scores or who have had trouble opening accounts or building their credit through financial institutions are turning to these apps because it's just easier. But for example, Dave does have monthly fees of $1, and they have this option called tipping. And this is an important part to talk about tipping, because a lot of these companies will say that they don't have, you know, the APR, or they are interest free, and they'll ask you when they lend you money. So let's focus on earn-in. If you have $100 that they'll lend you, at the end they'll ask you to tip for the service that they offered, similar to how we tip our waitresses or, you know, in Uber. But this is also something to keep in mind now, because let's look at an example. If I were to take out $100 from my credit card with a 25% APR, and that's a pretty high APR, it could be lower. But if I borrowed $100 from my credit card, after a month, the interest on those $100 would be $2.09. But if I took a $100 check advance from Earnin, their default on their website is to tip them $11 for their service. And they'll even tell you like you're helping 3 employers, or they'll make it look really nice. It's a default option. Even if you lowered it to a $5 tip, this is equivalent to a 130% APR. So this is something just to keep in mind when we're using these services, and kind of just like the little tricks they use to try to, you know, just get this is a company. Again, it's not a financial institution. They need to build their client base, and they want to make money. So just understanding what this means. Other considerations when we're using these lending tools is, again, the fine print. How do they get their money back? So Earnin does the tipping, but other of these applications, for example, Empower, if they take your money and you don't pay back, they're still going to withdraw it from your financial institution, and you may be left with overdraft fees, over the limit fees from your, or insufficient fund charges from your bank. So they're still going to get their money because they often do have to link it to your to a checking account or maybe savings account. And then also, what are the monthly fees for using this app, if there are any, and the credit reporting aspect, because we're talking about lending tools. Again, what is the credit bureau that they're reporting to, or how many of them, and how this affects your credit score. And there are credit fintech products that are specifically around credit building, because they know a lot of people are, you know, trying to, rightfully so, build their credit and struggling. Maybe they don't have access to certain credit building loans or products through a financial institution. They're turning to these fintech companies. So we have Self, who is one of the most popular ones right now, who offers a credit building account, and they offer secured credit cards. And secured credit cards, very similar to one you can get through a bank, where you are the one putting up the collateral. You put money into the account or into the card, and that's used as collateral if it does not get paid back. SeedFi offers loans, so personal building credit building loans up to $4,000 limit. And they have a built-in savings option. So just some tips on helping people save. Grow Credit is another one that offers credit building, but this one does it through not traditional routes. So for example, a subscription like Netflix, we pay that every month, $10, $14. They use that habit as to report it to credit agencies. We see a lot of credit bureaus, for example, Experian, who does this as well through their credit Experian Boost program. They also do with the rent, credit reporting on the rent. If you're paying it on time, they also credit report it. But Grow Credit uses these subscriptions. Kickoff is another one that has instant credit approvals up to $500 limit, and they have, however, this one has small monthly payments. So they all kind of have different products to just target all the little places where people can either build their credit or use these different products to help out. But again, we want to ensure that we understand all the terms and details. So for example, with SeedFi, if I take out a personal loan for up to $4,000, what happens once I pay my loan off? What's the time frame of the loan? What's the APR? What happens if I miss a payment? How often are they reporting to the credit bureaus? And who is backing up the secured credit cards? So for Self, if Self goes bankrupt, what happens to the money I put up as collateral? Like, who is the partner? If they have a partner that is FDIC member, or do they not? Where's my money being held? You want to understand all this information about your money to protect your dollars and ensure you're doing the most safe option. And then something, it's not on the slide, but it's always a good idea to read your own credit report. You can get one. It's our federal right as consumers to get access to a free credit report every year by the top 3 credit bureaus. And that is through annualcreditreport.com. And right now, because of the COVID-19 pandemic, they're allowing access to weekly credit reports until further notice. And then second to last category is our savings and investing options. So now a lot of people are investing through these fintech companies. So we have Acorn that offers investing through a feature called Roundup. So when you purchase something, and let's say it was $10.57, they'll round up, and that extra change will be invested into whatever setting you have through Acorn. And it offers monthly plans to do this. Robinhood is another very popular investment app where you can invest as little as $1. And they have on their website, they offer zero commission fees. And this is important to note because Robinhood has been one of those fintech companies that's gotten a lot of trouble with the federal consumer protection agencies, but also regulators that they've had some misleading practices. So now they have to be, eyes are on them. So they have this new thing where they say they have zero commission fees. But you still want to check the fine print on any investment that you're doing with them. And then you have Coinbase, who are a cryptocurrency exchange where you can go on there, buy and sell cryptocurrency. And then SoFi, who they call themselves a one-stop shop for saving, investing, spending, or investing, and they have high interest savings accounts. A lot of these fintech products or companies will say that and will offer higher interest rates that are competitive than what a financial institution can offer. But again, you want to make sure the protection around your money, and we'll cover later on who the regulators are in this, because they'll often release reports. They're always checking these companies to make sure that they're doing their business fairly. So do you want to we'll share some resources on how to make sure that we're keeping an eye on these companies ourselves as well. And then lastly, we have our budgeting tools. which we do share a lot in a lot of our budgeting classes. So we have Truebill, who has a budget and bill tracker, and they manage your subscriptions and negotiate bills. Because sometimes we don't even realize, how many subscriptions we have, and they'll help us just to keep an eye on them. And if we no longer are using one, make different recommendations on how to manage our money. We have YNAB, which is You Need a Budget. And this is a subscription budgeting software to save and pay off debt. They have, I've heard this a lot among a lot of consumers and clients that have had success with it. But, that big caveat of subscription is important because it's, I don't remember the price, but it's around $15, I believe. And, this is another expense monthly. And then you have Mint, who has custom budgets and personalized insights on spending habits. And one of the things to consider about Mint is that you do have to connect your bank accounts. That's how they track how your spending habits are, and gives you recommendations. And for example, if you're reaching a certain category, they'll give you a notification, let you know that you need to slow down on the category, you need to adjust your categories. So it just gives you a better idea of how you're spending your money. Okay, so those are our categories that we just covered in the different products that we shared, but I want to open it up to the group and discuss a little bit about reviewing all these FinTech products. What changes do you think you'll make to how you use FinTech apps?
I think I'll look at some of the investing ones just to see if, I can put some mad money and play with it a little bit and see if it gets anywhere.
Yeah. Have you, do you have any currently or not yet?
I have, the 401As and the 401, IRAs, and they get invested, but I don't make those decisions. So this will be interesting if I can, find the time and make those choices on my own, in the 5 minutes I have where I'm not working or sleeping or something.
Yeah. Definitely, and definitely the research will be important before making a decision to open an account, understanding with investment what options you have available. So for example, if it's cryptocurrency, we have the example of Coinbase, but recently FTX was a cryptocurrency exchange that it went bankrupt. Like they essentially took retail investors' money, and a lot of investors were left out to dry. They didn't get their funds back. And I can send out a resource on that, what happened with FTX, but you want to understand how is your money being backed up, insured, if at all. What happens if this company goes bankrupt or they take the money, it's not liquid? So how can you access your money easier? Just understanding all these things around your money will be important. Anybody else? And I can jump in. Yeah.
I was going to say, if anyone in the audience wants to put their responses in the chat, I'm happy to read them.
One, so my mom, she's a freelance hairstylist, and recently with a lot of clients, they're using Venmo a lot. And so she gets tips through Venmo, and we were talking about it a while ago, and people have had issues with Venmo sometimes because the money that you have in your balance, your Venmo balance, is in the app. So we were talking about it. She had a big balance in there because she wasn't transferring it back to her bank. So just again, understanding these little things we can do, like if our balance is getting up there, we can transfer it into a safe place, which would be that financial institution. Doesn't mean you have to stop using the app. This just means changing a little bit things to secure our money a little bit further. With Zelle, again, there were some issues around it. Recently, people saw that there was delays with using Zelle. So, for example, a tip could be to make sure that if you're using Zelle, connect it to a checking account instead of a savings that may have more funds in it. Ensuring that you're not sending money to people that you don't know or aren't familiar with the names. Because once that money is gone, again, a lot of these companies are only going to work as mediators, not guaranteeing any funds back. Those are just the little things that I've seen in my personal life. All right, so let's move on. And if there's any other, Tracy, let me know. We could take a time to pause. So some recap on pros and cons of using these tools are that they're innovative. Then they have innovative perks. For example, the ones with the high APRs is amazing because if we use, savings account through a bank, they may offer us like maybe 1% or 0.1% APR. That's a few cents a year that we see growth in our savings account. But a lot of these apps have a pretty high APRs, which means more money in our pockets, right? So they can be very innovative that way. They're viewed as popular. Venmo, Cash App, you can't go anywhere without seeing these accounts or these products. Sometimes quicker and easier than bank and credit unions. And then there's the convenience that sometimes you just can't beat. The convenience of opening these accounts, accessing their services, using them. But there are some cons. And so now we're more exposed to scams, fraud, and hacks. Because is at the end of the day a technology application, there are many hacks, and even financial institutions have hacks as well. We'll see on the news like Morgan Chase hacked, millions of customer info has been compromised. But there's also these companies that are seeing that, and there's challenges around that, especially if you're sharing. I recently saw 3 teenagers sharing a Cash App account, and so it's just more exposure to these things. Oh. There's less federal and state regulations. Again, like we talked earlier, they are regulated based on the product that they're providing rather than the company. So like a bank or credit union are being regulated by the FDIC and CUA. These companies will be regulated based on like if they are an investment FinTech, or they're offering banking services, or the buy now, pay later services, which are lending services. And then another concept is the consumer data, like how many companies or who has access to your personal information now. And then lastly is that there's really unproven history on many of these companies, and that they can shut down or be bought out. So one of the companies, I think it was Truebill, when I did this presentation maybe like a year and a half ago, it was called Rocket something. And now it's a different name. I had to take out some apps too because they just don't exist anymore. So it's just something that we don't see commonly with financial institutions, is that it's a big news if something were to, if Bank of America just didn't exist tomorrow. But a lot of these FinTech products, they come and go. So it's something also to keep in mind. And then what happens when these FinTech products play unfair? So we have this example of LendUp, which was a California-based FinTech company. They were established after 2008 crisis. Around, there was a lot of distrust with financial institutions. Banks were bailed out. People were left with a lot of economic challenges. And so what LendUp did is that they would offer payday loans to consumers that were often overlooked by these banks, and they promised to help increase their credit worthiness. And there was a lot of legitimacy around it because we had investors like PayPal, Google Ventures, and more who were really backing LendUp. But what happened recently was that the Consumer Financial Protection Bureau, which is a federal agency that regulates unfair companies and practices, they investigated LendUp, and they had them pay $3.63 million for failing to deliver their promised benefits. So even though they were saying that they were helping consumers and their credit, they had actually misled consumers about low prices from their loans. They had hid true cost of credit. They had reversed pricing without letting the consumer know. They understated their annual percentage rate, and then they failed to report the credit information. So fortunately, the Consumer Financial Protection Bureau was there to step in, but this is something that can happen. And it's not just with LendUp, it's happened with Advent, who was another online lender that the Federal Trade Commission investigated, and they had 3.7 million returned to consumers. And not even at this, large scale of, investigations, but we have CashApp and Zelle and Memo who also have various and thousands of complaints submitted to the FTC or CFPB because people have issues with them. Maybe they can't get through someone when they're filing an issue with the company, or they've seen that funds are missing and the company is not quite helping mediate them issue. So there's a lot of, still unfair practices going on. So what can we do as consumers is, first, are they insured? And again, I feel like a broken record, but are they partnering with the FDIC or NCUA? Are they a bank charter or not? And are they protected? What happens if the company goes bankrupt? What do they do with the data that you're sharing? If you're using a lending product, you probably have to submit your social security number, other identifying information, and where is that information being stored? And then how do they handle their complaints? And this is important because it's just an app. We don't have a physical place to go to, like with a financial institution. We want to ensure that we're working with someone who, or trusting our money with a company that will listen to us if we have any issues. And to give you some background on who are the regulators in this space, we have a couple. So we have the OCC, who are the Office of Comptroller of the Currency, and they are the ones that do this nationally chartered banks. So that's where you can go check if the financial company is a bank charter. And then we have the FDIC, who are the ones that insure deposits. They supervise and also have the examinations. So FDIC is important. They have if you go to their website, that you can also look up the company, see if it's FDIC insured. Again, if it's a credit union, it'll show up at the NCUA. You have the Federal Reserve, which is nationally chartered banks, and state chartered, so who becomes members. And then you have the CFPB, which is a Consumer Financial Protection Bureau, and they help consumers with reporting complaints, but financial institutions with assets over $10 billion. So essentially they help us, especially if there's unfair practices going on with financial institutions or other companies that handle money. And at the state level, you have different agencies that also regulate FinTech lenders, especially if they're state chartered banks as well, or not. Okay, and something to keep in mind on, when we're talking about these companies that in this charter, right, bank charter, whether it's federal or state, to get licensed to become a chartered bank, it's very expensive. So you have here 1 to 30 million for FinTech companies to be licensed. And so that's why many times they partner with a company, because they don't have that money up front versus a bank who can meet that capital and liquidity. So we want to be in control of using these tools, not the other way. So let's go through each category one last time just to see what tips we can learn on how to be in control of these products. So with peer-to-peer payment tools, which app will be the lowest cost, safest, and most convenient? And also, do you need all of them? You can decide maybe use one more than the other. And not only is this good for budgeting, but it's also good just to keep our information protected and just be safer, less exposed to different scams and fraud. For the credit building apps, have you tried the traditional route? So financial institutions also offer secured cards. Many nonprofits, including here in Maryland, offer credit building loans. And then there's also credit counseling agencies like the CCC, SMD, GreenPath is another one that offer debt management plans and counseling to build your credit. So with credit building, it's just figuring out all options before you're diving into the FinTech. And then banking services, we have the Bank on Maryland, and I'll talk about that shortly. But also, of all the options, you really want to compare which one's going to be the safest, low cost, and most convenient. With lending, you know, a lot of this buy now, pay later options and this cash advance or these personal loans that these apps are offering. An option we can, you know, start with is creating a spending plan. Because if you want something, again, some, you know, pair of sneakers, through a spending plan, we can really understand how much money we have at the end of the month to spend for, you know, fun, like sneakers or savings. So we don't necessarily have to use the product, you know, spreading out our the cost over installments, but we can save up for it and get it at the end. And what are the terms and fees if you're unable to pay on time for the product? That's going to be really important because it, you know, a big benefit of using credit is for emergency purposes. You know, if something comes up, we can use it, but you don't want to be stuck in a situation where your the terms and conditions of this product are going to make it more expensive in the end. And then we have our investing applications and tools. So if you are new to investing or the company is new, you want to start investing in small amounts just to make sure that if something does go wrong, it's an amount that you're able to lose rather than putting all your eggs in one place and you know, being left with just a worse situation than it started. So you can also research the company thoroughly and compare with others. There is a lot of, aside from financial institutions, there's also true and tried firms available like Vanguard, Merrill Edge, a lot of companies where you can also invest money, just a traditional route. And then going back on that Bank on Maryland. So Bank on Maryland offers checking and savings accounts that are following a set of standards. So they're going to be safe, low cost, and functional. They often, these accounts do not allow for overdraft or non-sufficient fund fees. So you'll never be hit with that surprise fee. They are low cost. Most of them offer opening for less than $5 with no unpredictable fees. And they're functional. So their certified accounts always allow free deposits, free withdrawals, and free bill payments. And all the accounts on Bank on Maryland are federally insured, whether they're banks or not credit unions. And then if you do come across an issue, these are the federal agencies to file a report. So the Federal Trade Commission have their website called reportfraud.ftc.gov. And this is really a good place to start because if this is happening to you, whatever the issue is, it might be happening to a lot of people. And what they can do is investigate it and maybe resolve the problem. Maybe something unfair is going on and shut down the company, return possibly some funds to the consumer. The Consumer Financial Protection Bureau is another federal agency that also takes in complaints and they also investigate companies. And then lastly, the U.S. Securities and Exchange Commission are a federal agency that regulates companies around investing in securities. So this will be, and they started doing this with cryptocurrency exchanges, but for example, Robinhood, Coinbase, they recently just released a report on cryptocurrency that if you're interested, you can go to your website and read. But they have also complaint site where you can file a complaint for those specific services. And that's all I have. If you're looking for more resources, we also have the mdcashacademy.org where we offer free financial education classes. Sometimes we have the cryptocurrency class on there, or if not us, other organizations will offer different classes around this topic too. So any questions, we can take this time to go over that.
Yeah, so I'm going to read them in reverse order. So if my credit union doesn't use Cash App or Venmo, what would you recommend that would be safe to use?
Yeah, so credit unions, you can go to, it really depends. I don't want to tell you what is safe because in the end, a lot of these companies, we have to take safe measures. Like for example, Zelle may be a participating like FinTech with your credit union. So you have to go to the Zelle website and see they're in the list. They have the long list of all the credit unions and banks that you can use that work with them. And I'm not saying that Venmo or Cash App are unsafe. It's just understanding the parameters of like their protection and how we can also stay safe using these apps.
You can always use, if you do end up using Venmo, you can transfer the money to your account. It just takes 1 to 3 days, whereas in theory, Zelle or like a Zelle-like product would be immediate. She has confirmed that, that particular credit union doesn't partner with Zelle. They may partner with another. Zelle just happens to be the largest one. It may not be the only one. And if you scroll up in the chat, there is also a link to a webinar we did last Money Matters month on how to safely use payment apps in case you are concerned. Another question, does Bank on Maryland have high yield savings accounts?
There are 13 accounts on the list from various financial institutions, from Chase, Citibank, not Citibank, Bank of America. There are some credit unions on the list. But I would contact each financial institution. I wouldn't know on their savings account. These are more for checkings. So low fees to open accounts, access into the accounts for people that have trouble opening accounts. Yeah. So I check the bank.
One was a comment in response to how will you change your participation after the webinar, and the comment was, I don't really feel safe with any of them. We often hear how they are compromised. It's counterintuitive to pay for an app to help you budget. I will stay with my credit unions that offer 5% rates on certificates, which is competitive. So that does raise a question that I've had is, other than the ones that clearly are charging you a monthly fee, how do payment apps, neobanks, buy now, pay later, or these saving and investing apps, how do they generally make money?
Yeah, so, and they all make money differently. There's definitely a marketing aspect to it. And so, for example, with the one that comes to mind right now was Coinbase, or a lot of these cryptocurrency that allow you to buy into it for free. They'll even give you like credit to start investing. And a lot of them work with celebrities, like a lot of celebrities that endorse these apps and bring in money into the application. Many of you are seeing possibly the sports gambling apps now, where they're just becoming more popular and more people are putting money in. And there's different caveats to like, we'll give you money, but you have to put in a little bit in, and then we'll give you the returns or whatever gains you made. So there's ad components, endorsements, and then there's these, like you mentioned, those fees, monthly fees. And then a lot of them with the interest that isn't completely transparent, that if we are late on some payments, they will charge the interest. They're going to take the money regardless, whether you have it available or not. They'll just withdraw it from your bank, and then the bank will charge an not sufficient fee or any fee to you. So that's why some of them often ask you to link a card or a bank to their product. And then I think you mentioned something about budgeting. One of the reasons we do talk about the budgeting components is because we're all different learners. Some of us do prefer to budget with a paper and pen. Some people have like the envelope method, and some people like the convenience of using a lot of these apps. And that's okay. It's just understanding the protection level. So for example, Mint is one of the ones we talk a lot in our budgeting classes because they do have a very high protection, similar to a lot of tax, a lot of the tax software protection. They have similar ones. They use Inuit for that. And so that's pretty nice. Caveat is that you do have to connect your bank account. So how comfortable you feel with that is up to you. And if you don't feel comfortable, there are other tools that don't involve technology. So it's just an option.
I'm not sure what the next one was. I think there's 2 more after this. but not moving forward.
Oh, sorry. Is there another question?
Yeah, no, I just wanted you to go to the next slide or the last.
Oh, okay, okay, yes.
Yeah. And one more, I'm sorry.
Okay.
This is in case any folks have any questions for the Office of Consumer Protection. We don't have any other questions in the chat box, but I do want to thank Cash Campaign and Whitney for this amazing program. This is as great as I remember it when I took it last year. So thank you. If you do have questions for Cash Campaign, obviously you can reach out directly to them. If you have questions for us, this is how you can find us. And thank you again. And for folks that are still on live, please check out the Money Matters website for more programming that we have later this month with Cash Campaign as well. And again, thank you very much. And we're going to stop the recording.